The Nasdaq 100 opened the week in anxious fashion as traders awaited key earnings reports from Megacap tech stocks. If you look at the year-to-date performance so far, you can see the big difference in performance of the Nasdaq 100 in blue versus the big tech names in white. This chart shows the FANG stocks continue to dominate the performance of the index. The importance of this is highlighted further this week, with big tech names like Microsoft, Alphabet, Amazon, and Meta all reporting this week. We spoke about the importance of 12,940 as support and how only a close below that would draw in the sellers. Well, Monday saw price close just below it, and Tuesday saw price follow through to the downside. The 20-day moving average acted as resistance at 12,945. This was ahead of earnings reports from Microsoft and Alphabet after US new home sales unexpectedly rose in March, which hit tech stocks as the Fed rate hikes come back into the picture. A hot economy will mean more rate hikes, and that is what traders were pricing into the Nasdaq 100 on Tuesday. Worries over regional banks also started to feed into the stock market after First Republic reported earnings and said that deposits dropped 40% to a little over 104 billion. That really hit the stock and sentiment, with First Republic shares falling to an all-time low. Price closed Tuesday below 12,940 as the stronger than expected earnings from Microsoft and Alphabet were overshadowed by the banking sector worries. First Republic shares were down 50% on Tuesday. Wednesday price remained capped at the 12,940 resistance level, as shown in the daily chart. On reports, US regulators were considering downgrading their assessment of First Republic Bank, which could hinder the bank's ability to borrow from the Fed. This kept risk assets in check despite strong earnings from megacap tech names. Thursday, however, everything changed again after Meta reported a first sales increase in 4 quarters and issued upbeat guidance. Meta shares rose on the report as shown in this chart. That also helped propel the Nasdaq 100 higher and back above the key 12,940 level. This level is key at the moment, as you can see from the daily chart. Trades should be managed around key levels like this. The weaker than expected US Q1 GDP print also helped. Q1 GDP grew by 1.1% year on year, below the estimate of 1.9%, which further fueled the rally, as a slowing economy will mean fewer or no more rate hikes by the Fed. Just like new home sales data coming in better than expected on Tuesday had a negative impact on the Nasdaq 100, the miss in Q1 GDP had stocks moving higher. Today price continues to push higher, even though Amazon is having a negative impact on the Nasdaq 100, after the company said cloud revenue could continue to slow in the coming months, which hit the stock. Despite the weakness in Amazon and the tentative start to the week and the midweek wobble around the banking sector, the megacap tech stocks have once again saved the Nasdaq 100 from breaking down, as earnings from these companies weren't as bad as feared. This is why price remains on track to close the week back above the 12,940 level. What this also does is it reinforces the bullish flag consolidation that is in play at the moment. If we flip to the weekly chart, it is even more clear. Price remains above 12,940. This will be the 5th week above it. With more tech earnings next week from Apple, a better than expected report could see price finally play out this bullish flag pattern, with upside of 13,320 and 13,440. Price first must overcome 13,230 resistance area from further upside. Downside remains capped, with 12,940 key support and 12,835 acting as further support at the 40-day moving average. Only if this level is broken to the downside would there be a momentum change. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.